Well, good evening, ladies and gentlemen, and thank you for being with me for this Danielcode webinar today. Great to see so many of our old friends here. Albert, of course, he's a tutorial guy. George, good to have you with us. Greg Palladini across in California. Very important man to the Danielcode. He's done 2 tutorials. He's a very, very good trader. Jeff Sherburne, been with us a long time. He's a wonderful supporter. Thank you for being with us, Jeff. Joe's with us, of course. Justin and his father have been members of the Danielcode pretty nearly since day one, and it's great to see the next generation getting into it. Keith's with us, of course. Lovely to have you with us. Jen, you too. And actually, Jen, you, that wasn't a pun. Mark's with us. He's a Danielcode stalwart, tutorial guy. I'll be talking to him next week, Mark. Mark L, he's a real leader of Danielcode. Matt's with us. All the Michaels are with us, including Michael Peel, who will be somewhere over in South America, I guess. Nathan's with us. Most importantly, Vicky's with us. We don't have many ladies with us, and we would like to have more, so great to have you with us, Vicky. Now, you can all hear me well, I understand, so that's good. Any questions, pop into the question box. Post your questions. I'll be happy to make sure I answer them before we get to the end of where we are. Well, a whole lot to talk to you about today, guys, and full disclosure, I don't trade crypto, and I have no immediate plans to trade crypto. But it's really interesting as a market of amazing size. The more you go into it, the more you'll be totally staggered by the amounts of money that have been invested, not only in the obvious ones, Bitcoin and Ethereum, but the small coins. And the money's frankly staggering. It's hard even to put it into words. The passion for crypto coins, and it is a passion to a whole lot of people. In some ways, it's a mania. The concepts that are being introduced, which are based on the blockchain, which Bitcoin, the daddy of all coins, introduced. The technology of blockchain itself is very, very clever and wonderful, and no doubt it has all sorts of uses, many of which are still being thought of and then developed. But the idea of all of these other crypto coins and what's happened to them and what they've tried to do, and the amount of money that they've raised, I mean, it's staggering. And I'm got a little bit interested in it simply because of the amount of money that they managed to raise, and now, of course, the amount of money they managed to lose, which is pretty substantial. And a lot of people coming in a bit late today. Matt, glad to have you with us. Mark, Peters, all the Peters, many of them. Joe, got to have you with us. And here we are. You haven't missed much yet. Gig's just joined us over there in North Carolina. Glad to have you with us, mate. Akshay's with us. And you haven't missed much. It'll all be recorded and posted anyway in the video. So let's move on. There's a lot of stuff, and it's really, really interesting stuff. So let's get on with it. Here we are. You know, if you've been with us before, that markets are rational, orderly, and sometimes predictable, and that the Danielcode is a set of proprietary ratios that control time and price in all markets. Now, if you're bored with the crypto part, make sure you stick with us, because as we go through this webinar and as it develops, you'll see that there is an answer to all of the crypto issues, and it's been hiding in plain sight for many years. So we'll see what happens. So, as I say, a crypto world is a true phenomenon. People just the blockchain itself, we know how that works. and it's wonderful, and it's got all sorts of possibilities. There's no doubt about that. And it's been going for a while. Bitcoin itself, the daddy of all the crypto coins, was introduced prior to 2010. Its inventor, Satoshi Nakamoto, I'm not sure if there's a real Satoshi Nakamoto or if that's a pseudonym, but there's a whole lot of other coins as well. You can think that Bitcoin, the original, was established as a store of wealth with its particular properties. It's pretty close to anonymous in most countries. The countries that want to tax you, of course, will move heaven and earth to find out if you own it and how much you own and what have you. But in a lot of places, it is truly anonymous. The real benefit of that is the blockchain protocols that Satoshi invented. But as a payment system, it's got an issue caused by its own success. This is a coin that today was sitting at about 17,000 per coin. It's been up into the 60,000s before it's having a pretty serious pullback now. But if you want to pay your bills, you've got to be in multiples of 17,000 at the moment, or, as I said, 60,000 near its high. And that's caused an absolute splurge of smaller coins. And they've been adopted largely, they've been totally adopted by the crypto family, if you like, the people who really believe in the concept of Bitcoin and what runs off it. The issue with the smaller coins is that it doesn't have the prime motivator that's in Bitcoin, which is that there's two real reasons for Bitcoin. One is that it offers anonymity, more or less, depending what sort of a tax jurisdiction you live in. And it has an absolute hard limit on how many coins can ever be developed. Or mined is the expression. They're mined. There's a whole lot of miners in the world. In fact, there's a new Bitcoin being born, if you like, about every 10 minutes. It's become a cult. I don't think that would be putting it too strongly. It has its own language in some ways. When they're having a bad time, like now, for a lot of them, that's called a crypto winter. I think that's quite descriptive, isn't it? Then you have the normal strong hands and weak hands that apply to all markets. Strong hands in the crypto world are called hodlers, and that came from a misspelling of the word hold, which they adopted, and they like that so much that they've created a new word for the end of days for some of these small coins, which is wrecked, but spelt without the second E in it. It's rather interesting, isn't it? Well, I find it very interesting. I find it very interesting because of the money they've raised. So we understand the benefits of Bitcoin, and it does have benefits. What it's worth, of course, is another question entirely, because it has those two very important characteristics, essentially anonymous, although it's under attack from the taxation authorities in those countries that have the sophistication to track all of this stuff. But it's the point that it's the fact that there's a limit, absolute limit, how many Bitcoins can ever exist. So that gets away considerably from the inflation problem, which is a red hot item at the moment. But generally, sophisticated economies try to engineer inflation of 2 or 3 or maybe 4%. And there are real reasons for that, because they're massive borrowers. And some of the longer term funding, if they can get a nice little not too extreme run of inflation going that the public's not going to scream and shout about, they're going to be redeeming those treasury notes, bonds, etc., with very much depreciated money. and that's the basis of it. So some of the wise old heads in this business don't buy Bitcoin or anything about it. Warren Buffett thinks Bitcoin doesn't produce anything and will never replace the US dollar. And Charlie Munger, his partner, just thinks it's evil. But it's there, and it's got a whole lot of supporters, but they put a whole ton of money into it. So Ethereum is a blockchain application. That's the other sort of reputable one, if you like, but it's designed to support a number of applications. It doesn't have the solidity quite of Bitcoin, so it trades at a lesser figure. But where all the drama is other crypto coins, and there's been an absolute proliferation of them. Bloomberg lists over 40 crypto coins, and there are many, many more that are so small that Bloomberg hasn't recognized them. But the problem for them, they're really are they a question in search for an answer or an answer in search of a question? I guess they're a question in search for an answer because the obvious criticism of these smaller coins is, what are they worth? What's their value going to be? We've had all sorts of very, very entrepreneurial experiments in what they call stable coins, some of which have very sophisticated solutions. And the best of those, what appeared to be the best of those, raised the most money anyway. They failed. But what's the purpose? What's the business case for these smaller coins? Okay, well, if Bitcoin is not only a store of wealth, but also a payment system, then it's too big, it's too clumsy, it's very complex to transfer money, and of course the size of the value of Bitcoin is working against it. It's too much money to pay most of your bills, and that's what the smaller coins seek to do. But in the process, they've got to earn some money, and they don't know how to. A lot of it is fees and commissions, and a whole new swathe of it is banking type services, lending. One of the biggest of them all, Celsius, was launched on the basis that they would be paying 20 to 30% sometimes in interest, and the proponents of it, the original inventors or creators of it, they were very confident that they could lend this stuff out at 20, 30%, which seems to me to be an inherent problem, because anyone who's prepared to pay 20% or more, I don't know that they're a great credit risk per se. But anyway, that's for someone else to worry about, not me. But there's a whole lot of them. There's a proliferation of these things. So let's have a look at some of them more. So I thought this was really interesting, and I've called it Hope Springeth Eternal. And I haven't forgotten who this quote's from, and it's very interesting. So this is a comment saying, we're not dismissive of the impact of the current crypto market, but we also believe that Coinbase, that's one of the big ones, would be unable to survive. We think that's misguided of the facts on the ground. According to a BTIG analyst who this week cut his price target on the stock to 290, down from the street high of 380, well, it closed Friday, this would be last week, at $62, and that was after a 22% rebound. And other crypto stocks have seen this similarly bullish dedication from the analyst community. Bitcoin miners, two of them here, Riot Blockchain and Marathon Digital, they have at least 75% buy equivalent ratings, and sport average 12-month price targets that are roughly 379 and 293% respectively above their current share prices. So, I mean, it's staggering stuff, isn't it? But this enthusiasm, if you're a crypto guy or gal, as the case might be, you love it, and they do. And it's been pretty staggering that you can see here among the 33 stocks that make up the New York Stock Exchange FactSet Global Blockchain Technologies Index, that's a mouthful, the average projected return over the next year is nearly 200%. That's 5 times higher than the average across the NASDAQ-100 index. And that's interesting because, as you'll see as we go on, the NASDAQ and Bitcoin are very, very highly correlated. And I guess that flows through to the smaller stocks as well. So that's not a bad measure to say that that's the 33 stocks in the FactSet index are 200% or 5 times higher than the average across the NASDAQ 100 index. That just shows you how much boom there's on these things, and still is. So let's have a look at some of the ones that have attracted the most interest. Three Arrows Capital, this was a very, very big deal. He's known for his incredible bullish view, said last year the world's largest cryptocurrency, I guess he's talking about Bitcoin, could be worth $2.5 million per coin. But he said on Twitter later that his super cycle price thesis was regrettably wrong. Well, I don't know many people who know anything about cycles, let alone super cycles. I know the theory of it all, but it hasn't been successfully applied anywhere as far as I know. The three capitals, they've just gone broke this week. Their problems appear to begin earlier this month after he tweeted a cryptic message to companies in the process of communicating with relevant parties. The problem, one of the biggest problems with all of these crypto coins is that they're not regulated. So we never actually know what their reserves are. We don't know what they all boast of having these massive reserves. But as we're beginning to find out, a whole lot of those reserves are invested in other coins. In other words, it's the crypto community lending to itself and then being bought down in the same way. So have a read of this. Bitcoin's down 70% odd from its record high. And they call them altcoins or alternate coins, the smaller coins. But the Terra ecosystem, they call it here, or DeFi, they call it, derived finance. It's ended with a bank run that made $40 billion worth of tokens virtually worthless. Can you believe that? $40 billion. Crypto collateral that seemed valuable enough to support loans one day became deeply discounted or illiquid, putting the fates of a previously invincible hedge fund and several high-profile lenders in doubt. That comes from Forbes, and it's serious stuff. And more on that. This is talking about Freed. He's a mega billionaire. He seems to have got everything right about crypto and was obviously an early adopter. His FTX is a giant amongst the digital asset exchanges. They have millions of customer accounts. Functionally, they operate pretty much the same as online stock brokerages. But outside these whales, there are more than 600 crypto exchanges around the world, operating in a largely unregulated manner. It gives you a few there that says never heard of them. Well, no one has. These are the ones offering margin loans as much as 20 times their initial capital to their clients and lacking any meaningful regulation. Many crypto exchanges have been vulnerable to scammers and hacks. There have been some very, very dramatic hacks where there's been literally billions of dollars lost, and this all seems to happen in the exchanges. It's not happening in Bitcoin itself, but it's happening when these are exchanged. So CoinCheck was hacked by 530 million some years ago, Singapore exchange, so on and on and on. It just goes on. Bitfinex was hacked to the tune of nearly 120,000 Bitcoin, worth $2.5 billion now. Wow, it's a big deal, isn't it? So Celsius, this is one of the biggies, and as you can see, they were started by a guy called Mashinsky, and he went on a really serious fundraising tour around the world, trying to meet whales, talking to them about what the Celsius network was going to be, and how it's going to pay, massive interest rates to people. And here he says he had a pitch, seemed to defy the basics of finance. Deposit crypto coins and earn interest rates as high as 18%, tens of hundreds of times the rates on traditional saving account. This is what he says. When you look at what the banks pay, you say to yourself, somebody is lying. Either the bank is lying or Celsius is lying, co-founder Mashinsky said. Well, we know now that the basic rules of finance haven't been withdrawing. If you're lending money, you've got to make sure you're going to get it back, and that hasn't happened. More than 1 million people entrusted their savings to Celsius, and deeper crypto route. Mashinsky maintained his company was safe. Well, of course you do. Then on the night of June 12th, they announced it was halting withdrawals because of extreme market conditions. It was like a bank locking depositors out of its branches to preserve cash in the middle of a panic. Well, markets have just continued to go down, so they've all gone belly up. And here's a little bit more about his pitch that got people in. And people have saying all over Twitter and elsewhere, they trusted Celsius with their life savings. Celsius' slogan was "Unbank yourself," and Mashinsky sold the companies a better alternative to traditional banks, which he argued were colluding to rip off savers. Well, I agree with that bit. And we give the vast majority of the income to the community, he said. This is a new paradigm. It's a new business model, never existed before. No one was crazy enough. Well, that's turned out to be quite omnipotent, hasn't it? Because they've lost a lot. But it's a culture. It's a whole lot more than simply a market. It's a culture, and people buy into it. Two of the glamours that have gone belly up are Terra and Luna. This was a very sophisticated play, actually. There were two different coins there. Terra, it's had a $55 billion face plant. Can you believe these amounts of money that people have just put in without any clue what they're doing, without any regulatory protection, with no idea of the value of the so-called value of the assets underwriting it? Because these are unregulated markets. That's the whole point. The regulators haven't got hold of them yet. They certainly will. I don't think there's much doubt about that. But it's really been the Wild West show until now. So this goes on to say they wiped out, plummeting coin price, wiped out hundreds of billions of market value. Can you believe that? Hundreds of billions of digital asset market value. And then you've had some even more stupid thing, NFTs, tokens. Turn a picture into a blockchain and you can sell it as I think it's called an NFT. When you've got Kim Kardashian, not Kim Kardashian, one of the other sisters, the big one, Khloe Kardashian, spruiking a crypto startup, and you've got who was I thinking of? She was spruiking a crypto startup, and someone else equally strange. You got to think you're in trouble. But anyway, that's what's been happening, and you can just read this stuff for yourself. Terra and Luna. Why it was interesting is Terra was the first coin, and Luna was a completely Well, it obviously wasn't centered. It was tied to Terra, of course, but its whole purpose was to use algorithms that incentivized or de-incentivized traders to keep the price at the guaranteed level. And of course, the real answer was once markets get into a panic and price goes down enough, no incentive in the world is going to get anyone to buy into it. And that's what's happened to Terra Luna. $45 billion faceplant. I mean, it's just staggering. It's just staggering. Here we are, and Zero Hedge, as always, has a really succinct and sensible take on all of it. That reckless lending practice has brought the whole crypto lending system down. So they take your money and promise monthly returns. They lend it out to other DeFi projects, that's derived finance projects, which is risky in the first place. On top of that, they lend out more money than they hold in assets. And this is quite just what they say. It's a practice that led to the global financial crisis, the crash, the mortgage-backed MBS crash of 2008, 2009. So now that the cryptocurrency industry is building the same over-leveraged financial product, do they think they found a solution to magically make profit where there is no underlying economic activity? Well, you see, they haven't. And that's against the law of finance entirely. The failure of these yield-searching companies brought the whole market and Bitcoin down in the last weeks. It's a great reminder one should have all assets in self-custody and that there is no magical solution, no money management by over-leveraging. Absolutely true. So Bitcoin itself, as being in the decentralized technology, they think it's unstoppable. And they may well be right. No government nor any bank can change or control it. That's the big thing about it, isn't it? This is especially important if you live in a country with authoritarian leaders or a broken banking system. As you say, it's still alive. It's not worth what it was. We're less than half, but it's producing new Bitcoin every 10 minutes. So for millennials and Gen X, which are the youngish folks, coding is a way of life. Many are so attracted to the technology and its undoubted potential. It is its own little world with expressions such as, that word should be hodl, H-O-D-L, not ho. And of course, you see these statements. A welder in a US dockyard celebrates he's free from the daily grind. He can live well and support his family from the interest he is, brackets now was, earning with Celsius. And that was the sort of thing that just set off this mania, self-reinforcing messages to each other with rockets on them, to the moon, to the moon. That was the catch cry. And early adopters of Bitcoin are fabulously rich. Later adopters, not so much. But it's interesting, the vast percentage of Bitcoin that is actually controlled by very, very small numbers. These early adopters and many of the miners, they no doubt they're fabulously rich, even at current prices. And what I say is that all coins other than Bitcoin are searching for answers to that question, how do we make money? Because they don't, and that's the problem. And lending at massive interest rates on dubious securities that themselves can vacillate in price, that's not a good solution. That's not a good business solution. It's never been a good business solution. That's been done to death. Think of late 2007, 8, 9. That's what all the MBS business about. They were lending money to anyone with a pulse, used to be the saying. Or if you can fog a mirror, you can get a new housing loan. Incredible. Keep lending, keep lending, keep lending. Well, doesn't work. You need much more sophisticated management than that. But no crypto regulator or disclosure rules, that's the big issue. But funnily enough, the people who put so much effort and time and work into creating all of these coins, they're all searching for an answer to that question, how do we make money? And the many brilliant and driven coders and entrepreneurs miss the most important code of all, Daniel's code. And you'll see what I'm talking about very shortly. Now, here's Terra. This was the first of the biggies to go. Carnage is a polite way of describing it. This is the Terra price, and it's in Australian dollars, but it doesn't really matter because it's gone to zero. This is Celsius, and it's pretty much done the same. It's worth pennies, I think. So have a look at this price history. It's really interesting. This is from Investopedia. It's not up to date. Markets today were under 18,000 for Bitcoin. But this is the price history of Bitcoin. There's no doubt that for early adopters, they have done fabulously well. And you can't give too much emphasis to that word, fabulously. I mean, it's just been a boon, hasn't it? But of course, how have they handled the sell-off now, and where does it go? If you have a look at this, this is Bitcoin's past. It's only a few years, but you can see from its start in 2009, it just goes sideways, sideways, sideways. There's a jump up in 2017, has another little bit of a push in late 18, and then you get this explosion. And it has been stunning. Why does that interest me? Well, it interests me because I like to see what markets do, and I try to understand what makes markets do what they do. This is our 24-day chart, and you can see from the high down to an earlier low that you can't see, but pretty much the start of this move up. The retracement's gone almost exactly to our 74% retracement, which is one of the Danielcode numbers, 74.2. And in this respect, you know, it's just acting like a normal stock. This is actually Bitcoin, the big daddy. This is Ethereum. It doesn't seem to have found its support yet. Its next support is down around 541. That's still got a way to go on that fella. But this is our 24-day chart. And the chart on top is Bitcoin. The chart on the bottom is the NASDAQ, the continuous contract. Have a look at that for a correlation. And it's even more marked than that when we move from the 24-day chart to the daily chart. You can see on the NASDAQ chart, it has these blanks all the way through. That's because Bitcoin itself, the futures contract, it trades 7 days a week. It trades on the weekend, Saturday and Sunday. So those are the gaps that are skipping in the NASDAQ. So let's go down the daily chart and have a look at this. You can see that Bitcoin and the NASDAQ are very, very highly correlated. They really are. And interesting to see how that holds. If there's ever, well, there will be, of course, these things are just all cyclical, a decent recovery, what will happen and what will be shown there. So the question for coins other than Bitcoin, all of these coins, stable coins and others, what is the business case? And some of them are as unsophisticated as saying we're holding dollar for dollar with the US in our reserves, but being unregulated, you don't know where those reserves are, you don't know what they are, you have no idea what the mark-to-market protocol is, or if there even is a mark-to-market protocol. So it's all pretty iffy stuff, but there's an answer to all of that, and it's been staring everyone in the face. I don't know why someone hasn't woken up to it. I don't know why. Perhaps I should be issuing a Danielcode coin. We'll just call it Daniel, perhaps. But this is a business that makes a whole lot of money, which you may not be fully aware of. This is the Russell 2000, and these are Danielcode time signals. And we're trading them in this particular example on the simplest basis possible. That is, you exit first profitable close, or if you prefer, if you're not looking at the markets when they close, first profitable opening. And if you have 1 cent profit, you take it and exit the trade. Have a look at this. This is every trade in the month of June, which has just ended. This is there's 7 trades. This is the Russell. This is the least volatile of all of the equity markets. And those 7 trades have made over $9,000, trading the simplest way possible. Simply take these Danielcode time signals, exit first profitable close or first profitable open. They mean the same thing. Put this on your own chart and work it out for yourself, because it's so staggering. I don't think many of you really understand the power of Daniel's code. Here is the key to it all. I'm sure many of you know already, but have a look at this. This is Gain Capital's list of margin requirements as at today. Go down until you see the E-mini Dow, which we trade, the E-mini NASDAQ, which we trade, the E-mini Russell, which we trade, and the E-mini S&P, which we trade. You will see that for the mini S&P, the current margin is 11,000, out of our line, 11,550. Now look across to what the day traders can trade at. Margin of $750. Okay, Russell's much the same. The margin for the Russell is 6,050. Day trading, if you declare yourself a day trader, which simply means you're not going to carry a position overnight, you'll be flat at the close. 6,050 margin for the Russell, 750 if you declare yourself to be a day trader. NASDAQ, $16,500 margin today. If you declare yourself to be a day trader, $1,000. Mini Dow, which we trade, 8,800 margin today, $750 if you declare yourself a day trader. Now, for that chart I've shown you, that's exactly day trading. You're getting out at the first profitable close. You're not holding a position overnight. And of course, your biggest risk will be the value of the margin. You're not going to have more than that as your margin. So once you've worked that out, you'll see exactly what I'm talking about. This is what's happened in the month of, there's a typo there, folks. That's what happens when you start work at 4 o'clock in the morning and haven't had enough cups of coffee or fresh air to wake your brain up. This is for the month of June 2022, not January. But that chart I just showed you, there are 7 trades there. There's the profit on each of those trades. There's the margin if you declare yourself to be a day trader, and look at the return against the day trader's margin. You've never seen anything like that, have you? Nobody has. Certainly none of the crypto guys have seen it, or they'd be rushing to implement it. So let's think about those returns. About 9,000 a month for June 2022. Average true range of that market's about 2,500 a day. Assume 6 reasonable trading months to balance at break even. So your gross return for the year looks like 54,000. Your return on margin 7,200. Call that rubbish and cut it in half. Then do it again if you want to. It doesn't matter. Assume your account size is 4 times margin, and you're still at 1,800% per annum. Daniel's code is the best known money maker. You do not require a bunch of capital. It takes about 10 minutes a day once you understand the Danielcode time trading signals, and we trade on the world's biggest and best regulated futures exchange, the CME, Chicago Mercantile Exchange. Overcomes all the issues about how do you make money. In fact, I don't know why anyone's doing anything else with their time, but there you are, some people do. And that was the least volatile market I showed you, the S&P, the Russell 2000. This is the NASDAQ. This is the most volatile of the equities. Have a look at it. $23,000 profit for the month of June. Maximum loss, I put the failure signal on there, $750. Return, 3,000% on margin in 1 month. I know you want to tell me it can't be done. It is done. It's being done all the time. There is some sophistication about the stop loss management, which is not appropriate to set out here. But I want you to really think about that and then think about it some more. It's just staggering stuff. And it's there for you. It's happening all the time. I've laid out for you here just a few of the other... hi, Jimmy. Yeah, good to see you with us, mate. I've just laid out for you a few of our interesting trades this week. Almost all of these markets that I show you, the TO3 signals do a considerable part of it. There's quite a degree of overlap between the TO3 plus signals and the Danielcode time signal. So some of you may have seen the best parts of this already. And sometimes you get these beautiful trades like we got in corn at the moment. Pretty spectacular. We had a TO3 sell signal and a time sell signal at the high. It's run all the way down without a one-day counter trend. We're sitting on $5,500 thereabouts for being a short one contract in corn, and it's a very small and modest contract. So that's pretty fantastic. Here's coffee. This is not a lot of you trade coffee, and I know that it's on a different exchange. It's on the ICE exchange, the ICE exchange, which means you've got to have a separate account. So most guys and gals just don't worry about it. But the US dollar index, coffee, and sugar are the three markets on the ICE exchange that we trade, and it just goes beautifully. Okay, so where we are, we'll keep going, and we've got a couple of questions coming up, which is good, and that was coffee. I've shown you that, and this is the S&P Emini traded in our traditional way. Which is different to what I showed you before, how you would trade it being a day trader. And I've just put this in to show you the killer, sometimes two killers outside bars. They're a horror, but they are a part of trading. You have to know how to handle them. But we don't have too many of them, thankfully enough. So the Danielcode will save you. It's been hitting in plain sight forever. Since 2008, at least, we released it to the public. I'm not sure that any of you, or many of you, really have grasped how powerful it is. So I hope you paid attention to those signals that I showed you before on the Russell and the NASDAQ. Put them on your own chart. Work it out for yourself. Okay, you'll see exactly what I mean. There's more money doing that than anything that crypto has even ever dreamt of. In fact, compared to trading Daniel's code, that's what it started off. Don't forget, we call it the Danielcode. It actually started life as Daniel's code, and it's amazing. Okay, let's keep moving. We're near the end of our formal presentation, but I do have some questions for you. If you would like to learn how to do all this stuff, in other words, learn how to create for yourself and trade not only the Danielcode TO3 Plus and blue line signals, but also separately how to create and trade Danielcode time signals. That's the big banana. If you're interested, send me an email. You want to join the elite and learn how to do all of that for yourself? jneedham@thedanielcode.com. jneedham@thedanielcode.com. Remember, the business of trading futures and Forex is not to be right. The business of trading is making money. I stress that in every webinar because it's really easy to get carried away with the process of creating signals. But remember, creating signals, knowing the techniques to trade, having your risk management the right way, having your stop loss management, one of many options that you have there, all of that is all going to one point only, making money. That's what we do, and that's why we do it. And my argument is that done the way I'm suggesting to you, which is only one of a number of alternatives, it makes more money than anything else I'm aware of that you can do legally. So that's it. If you haven't already had your free trial, folks, please go to www.thedanielcode.com. Start your free trial. Just hit the register button. Any issues, and you may have issues if you've previously had a trial, contact Terry at support@thedanielcode.com. Some of you have had a trial some time ago, and we certainly like you to get up to date with what's happening in the Daniel Code world. Disclaimer, we always show you this. I urge you to read it. It's very important. It's very easy to lose money trading futures and Forex if you don't know what you're doing. By the same token, it's very easy to make money trading futures and Forex once you've done the Daniel Code tutorial and know what you're doing with everything. Okay, here's some questions. How would you have traded the 628 bar for the S&P? Let me have a look. I'll have to get a different chart. Just give me a moment with that. Oh, it's Benjamin. Ben, just give me a moment, mate. I'll have to look at this on a different chart. We're looking at the S&P for 628, 622, 627, 628. Here we are. I don't know if I've got a 60-minute breakdown of that. There we are, 3948, 3950. Well, 3948, if you sold it, the failure point would be 3950, and it went to exactly 3950. If you got filled, you're probably unlucky under the lows and continued down. How would you have traded 628 bar for S&P? We broke the lows, then ramped and broke the highs, then collapsed again. Well, if you got filled 2 ticks above the high, you were unlucky. But you could have used a bigger stop, or you could have just said a rude word 3 times. That's one of the killer trades, and any charts you see, thankfully you hardly ever see them in equities markets, 2 outside bars back to back. They'll get you sometimes. The whole point is, how often has that happened in the past? And the answer is, I know it's happened because I've been trading it when it's happened. But thankfully, it doesn't happen very often, and the rest of the time, it's giving you a great deal of money. Did you miss it? David, I don't know when that was, but if you'd like to go back, always in the market methodology in a webinar, did you miss it? Go back to, this was a different topic today, David, but go back to any of our previous webinars. They're all listed on YouTube as well as at the Daniel Code website, and you'll find that one I was talking about may have been 1 or 2 webinars ago, but they're there, they're free. Go through them. You'll learn something. It's all interesting stuff. Okay, and glad you're with us, David. Yeah, good. And you too, Ben. I'm glad you're with us, my friend. Okay, all the best, folks. That's us for the time being. I hope this has given you something to think about. And if you'd like to know more, please email me, jneedham@thedanielcode.com, and I will be happy to assist you in any way possible. No, that wasn't Ben Waldron. Oh, you know Ben Waldron. I haven't heard from Ben for years and years, David, but he was a terrific Daniel Code client for many, many years. Really was. Okay. Yes, Ben, of course, shoot me an email and we'll set that up for you. David, Ben Waldron lived in Newcastle, as I recall, and as I say, I haven't heard from him for a long time, but he was a wonderful guy, very, very nice fellow. I knew him well. All the best for that, folks. Enjoy your weekend. Start thinking about making money as quickly as you can. Let me know if he's okay, David. He was a bit of an age then, as we all are, or some of us at least. Okay, take care, folks. Nice to have you with me. Bye-bye for now.